Hi everybody, this is Ospreyeye from MyChartCoach.com, and in this video we're going to take a look at some of the stocks that were in play today. Okay, first let's take a look at MU. It's on a nice 3-day run here, closed up 6%, so that's a giant move for this stock. It's now above 70 on RSI. You've got Fasto up here at 94. Notice how previous runs it's been able to head higher above uh, 80 on Fasto and above 70 on RSI. So it has a history of being able to continue pushing higher above those levels. So this is signaling the potential start of a new push higher. And so you've got a bullish crossover on ADX here with PYDS crossing ADX to the upside. That's a signal the bulls are taking control. But you want to see, if you're a bull, that the green line stay above the black and the red line. And so what we are looking for today was a close above the closing price on October 10th. That was the high close resistance level to break. Notice how there was a really tight channel for the last 3 weeks, and then today there was a gap up open above the top of the channel and a breakout with a close above the upper Bollinger Band. So this was a nice breakout on a volume spike. There was a PSAR bull flip today. There was a MACD bull cross down here on the 8, 13, and 5, and then keep an eye on the 12, 26, and 9. If that crosses over, that'll be another signal that a possible new push higher is starting. Okay, so when a stock is breaking out on the daily chart, the key is to take a look at the weekly or monthly chart to find resistance. And since MU is not only making a new 52-week high today, it's also making a multi-year high. So take a look at this monthly chart. You can see this is this month's candle over here on the right, and you have to go all the way back here to 2001 to find the resistance levels that are being hit right now. Okay, so that's why we were putting out alerts that 45 was the key resistance level to break, because that's the next candles. That's the next horizontal resistance. Notice how many times this 45 level was hit without breaking for a monthly close above. So that could be a tough level to break. Now, if there is a monthly close above that level, now keep in mind that this month's candle has formed, since this is the end of the month, and so tomorrow there'll be a new candle starting, and that candle will not be formed until the closing bell on the final trading day of next month of November. So next month's candle, the November candle, needs to push above this red line and close above that for the month. That would be the signal that it wants to break out higher. Notice that there's not a lot of resistance between the 40s and the 60s, so you could see a run up here to this 63, 64 zone if it can break above 45 and keep the uptrend going. So for the month of November, bulls, you want to see a close above 45 for the month. This is a really strong uptrend. This is a clear break above resistance. Notice last month that there was a break above the 2014 high close. That was the signal that it wanted to head higher, and it had big follow through today or this month. And so yeah, so the monthly chart is going off, and we'll see if it can break 45. If it fails to break 45, it could stall out, and if that happens, then candles work back into the bands. What you'd want to see hold first is EMA 4 at 426. If that breaks, the big level is the middle Bollinger Band down here at 41. As long as the middle Bollinger Band is holding, the uptrend is intact. Notice the middle Bollinger Band's been holding since back here in August, when resistance broke, and when the 50-day simple moving average turned into support. As long as candles keep this pattern going, it will signal more upside potential. So keep an eye on 45. Yeah, just to let you know, the calls are going off right now. Take a look down here at the November 3rd 44.50 and 45 calls. They were up 1,500% and 1,400% today. Yeah, so we have some traders in our chat that are doing really well right now. Thanks a lot, Pizza. Big shout out to you for sharing the options information with everyone in the chat. It's been great. People are really starting to do well here. So keep an eye on the MU calls. Okay, take a look here at HMNY This stock is bouncing today, and so as you can see here on Fasto, it's at oversold levels. It's been below 20 for quite a while. There was a bullish crossover today. Notice how the black line crossed the red line to the upside, so that's a good start. If it can break above 20, that would signal the chart's heating up. You've got RSI now below 50. It needs to get back above 50 to signal the bulls are back in control. ADX does not look good right now with the green line below the red and the black line. It needs to get back above those levels. So what's going on, as you can clearly see in this chart, it had the nice uptrend, and then now it's got the downtrend. And notice it's been in this very tight channel, just riding basically EMAs 4 and 8 resistance lower. Notice right here there was the crossover where the pink line crossed the lime line to the downside. That was signaling more downside risk. Well, today the close was right at EMA 4. It's currently at 1068. So if HMNY can close above that level, that's going to be a signal that it wants to push higher. And then we'll be looking at EMA 8 at 12 basically, and notice how that's the top of this channel. So it'll have to break above that. Then we'll be looking at EMA 13. Just to, the first things first, it's got to break EMA 4 resistance. That'll be the first big step. It bounced nicely off of this target, off of the 50-day simple moving average. We were looking for a bounce off this level, so it needs to hold that. If you see it drop below this green line, currently at 980, and a close below, that's going to signal downside risk. If that happens, you could see a drop down here to the 100-day simple moving average at 622. So real important that it closes above EMA 4. It did form a bullish one white soldier reversal pattern today. So this is a nice a reversal pattern. I discussed this in yesterday's video. So we'll be looking for bullish reversal confirmation. Okay, so let's take a look at PYDS. Okay, so this was the big runner today. It closed up 80%. Congrats everyone that caught this early. The key is to get in these early, and then and then study the charts to figure out whether or not you think this is going to be a multi-day run or not. So if we look quickly here at RSI, notice that it's hitting up here at prior levels where it's hit resistance and pulled back. It does not have a history of being able to head higher above 70 on RSI. Same thing with Fasto. When Fasto gets above 80, it usually sharply pulls back. Notice each spike above 80 is followed by a quick decline. Today it was above 80 when the chart was made. It was up here at this red line, but it pulled back. Notice the long upper wick on today's candle. That will lower Fasto. Notice the parabolic move on ADX. I didn't discuss this earlier, but notice that each of these spikes were accompanied with a parabolic spike on the green line, which is plus DI and ADX. Those were all followed by sharp declines in the past. So if history repeats, you're going to see a decline on DI. You're going to see a pullback on Fasto. You're going to see RSI pull back. I mean, that has been the trend. And if you look here at this chart, going all the way back to January of this year, each time that there's a bullish volume spike and a big white candle forms, a red candle forms the next day. So notice down here, this is a mini volume spike, red candle the next day, and also it's the close above the upper Bollinger Band. And so if you look here, there was a close above the upper Bollinger Band, a red candle next day. Notice the big volume bar, red volume bar the next day, and then you come down over here. You've got the big volume spike back here in August. You've got the big close above the upper Bollinger Band, and that was followed by a red candle, and the candle's working back into the bands. And so now in October, you've got the big volume spike. You've got the big close above the upper Bollinger Band. If history is going to repeat, the last 3 times this has happened, the candles have worked back into the bands. Then the odds are that tomorrow's candle is going to be red, and you're going to see a pullback. If that happens, the upper Bollinger Band at 210 is going to be the first level it's going to try to bounce off. You've got EMA 4 down here at 190, so that's the first major support level below. Notice that we were discussing this, and we put out alerts in the chat. We were using this as a case study, and notice how it was hitting. You notice this ascending resistance line. The share price was above that intraday, and we were saying that it's more likely a long upper wick was going to form, and it was going to close below that level. One of our chat members was thinking it was going to head higher. My analysis was signaling that it was probably going to have the long upper wick and a close below this red line, and that is exactly what happened. And the reason why I was thinking that was going to happen is because that's what's happened in the past. What you learn from charting is that history tends to repeat. So if you can figure out the patterns, then you can anticipate history repeating, but always keep an eye out for a possible change in trend. And that's what we're doing here. You know, there could be a change in trend. PYDS, this could be the one time that it breaks out higher and keeps running. And so that does happen, but you know, so you have to anticipate you know, history repeating, but keep an eye out for a change in trend. If you look at a weekly chart here, the reason why we were putting out alerts that 295 was the resistance zone was because of this weekly chart. If you look back here in October of 2016, you could see the high on this candle, the wick on this black candle was right here around 293, 295 or so. And notice how the high of day today hit exactly that level. This chart was made before this level was hit as a resistance zone, and so this was all mapped out before it happened. Alerts were put in before it was hit that would be the target, and it hit it exactly and pulled back. So congrats to everybody that was in the chat today and was able to you know, utilize that information to make solid investment decisions or whatever, or being able to trade accordingly, because the bottom line is it was just all in the charts. All I was doing is just reading the charts, and it, you know, this happened to play out. This happened to play out as anticipated. And so what happened here is it pulled back and it closed right here at this black candle in October, and so it needs to close above that level. This is the high close level going all the way back to March of 2016, and so it hasn't closed above that level for the week, you know, since that time. So it's, if it can close above that level this week, that's going to signal more upside potential, and then you're going to want to see it break above this 293. If you can get above the 293, then you've got this upper wick up here at 380, so it could really get going if it can get above 290. Notice that this is a weekly chart, and so this week's candle will not set until the closing bell on Friday, so it still has 3 more days of trading. This candle is going to change a lot between now and then. Now if it does pull back, the 200-week simple moving average at 224 is the key support level to hold. If it pulls back below that, you've got the 300-week moving average and EMA4 down here at 195. Once again, notice that the upper wick in April hit that same key resistance zone from October 2016, and the exact same thing happened in August. Notice that the same thing happened where you had a weekly white candle followed by a red candle, a weekly white candle followed by a red candle. You had a weekly big green volume bar followed by a red volume bar. You had a big weekly green volume bar in August followed by a red volume bar. History is saying that next week's going to probably be a red volume bar. That could change. You never know. You know, there could be a bullish change in trend. We'll keep our eye out. We'll just have to see what happens. And so if you take a look here at the PYDS 15-minute chart, you'll see here some of the red flags today. So you had the really bullish move. It was the classic breakout above resistance. Notice how it got above the moving averages here. It had the super tight Bollinger Bands. Notice how tight the Bollinger Bands. That was signaling a move was coming. When it broke above the 300 days or 300 simple moving average here on the first candle of the day, that signaled it was in play, and then it rode EMA4 the entire day. The signal was to keep riding until there was a break below EMA4, and that finally happened at 1:30. Notice here how it topped out, and you know, and the interesting thing was, you know, it hit our 293 target, and then it fully formed the next signal. If you didn't get out at high of day, this is just like other plays. This is like deja vu, but this happens a lot because we know how to chart. But yeah, if you didn't get out at high of day, then the close below EMA4 was the signal to exit. So that was the red flag. You notice there was a PSAR bull flip. That was a red flag. The green dots flipped above the candles. If you didn't get out on this candle, the next red flag was the break below EMAs 4 and 8. Now we didn't know if it was going to break down further. At 2 o'clock, it did come down. It didn't quite hit the middle Bollinger Band, which is always a nice level to reload off of. It held EMA 13. That was strong, and it came into the close here and it held the middle Bollinger Band. So it was holding support into the close in a tight sideways channel for the last couple couple hours of the day. So heading into tomorrow, 245 is going to be the big support level to hold. If you see a break below 245, that could signal the chart's breaking down. 260 is going to be the big resistance level to break. If you see a break above 260, then it could run back up here to 290. If it can get above this high close here around 289, 290, then that's going to signal it wants to break out higher. So keep an eye on it. If it does break below 245, you could see a drop down to the 50 simple moving average at 192. Yeah, we'll see if this can get a multi-day run going. Keep in mind sometimes stocks gap up in the morning and then sell off. A lot can happen during the trading day. So yeah, and I just also wanted to point out that you have to look at the volume. Notice how this was extremely thinly traded before today, and then check out all the big volume today. This is the type of stock that after the volume dries up, it could be very difficult to sell. So keep that in mind. It's always easier to sell into strength, and while there's still buyers around, if you look at the average daily volume for a stock and it's super low, and then you see the big volume, if you get in, you could end up getting stuck holding the bag. And then take a look at MACD here. When there were the bearish crossover here at 2 o'clock on the 12, 26, and 9, and the bearish crossover at 1:30 on the 8, 13, and 5, those were signals that the chart was breaking down. So now what you need to do tomorrow is take a look at the 8, 13, and 5, and if you can see a bullish crossover on MACD and a bullish crossover on the 12, 26, and 9, that'll signal that the chart is heating back up. Okay, so take a look at NOG. Okay, so this stock followed through really nicely today. Notice how it closed above 50 on RSI. It's at 52, so it's in the bull zone. It's at 74 on Fasto. So this has been on a nice multi-day run. Notice it has had 4 green volume bars in a row with a big volume spike today. It was the largest volume day since back in August. The bullish close today was above EMA 13 and the middle Bollinger Band. So that close above the middle Bollinger Band at 766 is signaling the possible start of a new uptrend. It did hit the next key resistance level, which was the 50-day simple moving average, basically at 83. Notice how back here it failed to turn the 50-day simple moving average into support and pulled back and formed this really nasty downtrending channel. It needs to get above that level and then hold it. If it can, then that would be a bullish change in trend, and we'd be looking for a potential run up to $1 up here, $1.04 at the 100-day simple moving average. Notice that's lined up at the closing price on the 26th. Okay, so yeah, keep an eye on it. It's got a PSAR bull flip, MACD bull crosses on both time frames. Okay, so take a look at AVGR. Okay, so it had some after hours news today. It's in play right now. Check this out. They've got some received some FDA clearance here on their device. So go ahead and read that. Check it out. It did get a bullish move in after hours trading. So it closed the day down here at 32, and it was holding this 50-day simple moving average. We had been watching this for a bounce. We've just been waiting for this thing to get a bounce. It finally had a catalyst today, the after hours, and it closed after hours up here at 40. So you could see a gap up open at this level. Notice how that's lined up with this open from back here on the what is that, the 20th of October. And so if it can break above that level, the next key level is going to be 46. Okay, so that's the closing price back here on the 27th. If it can get above that, then it can run back up into the 50s, and you'd be looking at a run possibly to 55, which was the opening price on that same candle. So yeah, so keep an eye on AVGR. It should be in play tomorrow. If a black candle forms, that's going to signal that it's not ready to go. It's got to stay above the 100-day simple moving average at 37. If it drops below that, it's going to signal more consolidation. If it can close above that level, that's going to signal upside potential. Okay, and so a stock to keep an eye on, BIOA. Okay, it formed a bullish reversal pattern today. And not a super strong one, but it did form a pattern here called bullish Haremy, where today's candle fit inside yesterday's red candle, today's white candle, and so that does signal a possible reversal starting. We'll see. It has to follow through and confirm. It needs to get back above 50 on the RSI. We've got Fasto down here at oversold levels. This is a previous chart that we posted, so and the annotations have not been updated. So yeah, we want to see if it can heat up here. Similar to the last chart that we looked at, AVGR, notice how this pulled back all the way to the 50-day simple moving average, currently at 50. It needs to hold that level. If it can bounce off that level, then it could get moving back into this previous channel. Even just going from 50 back to the top of the previous channel at 70, those are some nice percentage gains. Now EMA 4 at 54 is the key level to break. It needs to close above that level, and then it also needs to get above the middle Bollinger Band at 57. If it can get above both levels, it could put it back in this bullish uptrend. If it drops below the 50-day simple moving average and closes below that level, that will signal downside risk. It's imperative that it bounces from this level. So keep an eye on BIOA. We're going to see if it can get moving. Okay, thank you very much for viewing this video. If you'd like to learn more about charts and technical analysis, check us out at mychartcoach.com and our YouTube channel at mychartcoach.com. Thank you.